Exchange traded products are securities listed on the stock exchange, just like any other share that's listed on the JSE. But where they differ is that they give you exposure to an entire portfolio or fund of shares. That's why we have the term exchange traded fund. So it trades on the exchange and it's a fund. So you're getting a portfolio of shares, and that portfolio of shares typically tracks an index, and the index measures the performance of the top companies on the stock exchange. Now what an index does, it gives you the average return of the stock market. Well, an index, as I said, measures the performance of the top companies on the market, but the index is chosen by the stock exchange itself. So the manager who tracks an index doesn't pick the securities, he doesn't pick the portfolio. The portfolio is chosen by the stock market itself, and they choose the companies that are the biggest companies and the most liquid, and the companies that perform the best. If a company doesn't perform well or gets a bit smaller because of its share price falling, it falls out the index. So what an index does, it gives you the average return of the market. And if you take an index like, let's say, the JSE Top 40 Index, which is the top 40 shares on the Johannesburg Stock Exchange, that accounts to 90% of all the trade on the Johannesburg Stock Exchange. So when you buy that index, you're actually buying the performance of 90% of the market. So often when you look at indices, you're saying, well, how do I buy the market? Well, you buy the market by buying an index.